Welcome back. Vikas Khemani is joining us, founder at Carnelian Capital Advisors. The global markets are slightly tricky today, but their six Nifty is off the lowest point, so we'll keep discussing that. But Vikas, good morning. The stock that I want to discuss with you first is Bharti Airtel. This move that we had yesterday, of course, a lot of this was this whole NSDL fiasco. But leave that aside. Do you get a sense that perhaps there's life back in the stock now?
I think Bharti definitely, if you see the telecom story, share has been quite consistently consolidating in favor of Jio and Bharti. Vodafone is consistently losing market share, and Bharti has been adding subscribers this quarter as well. They have added significant subscribers. So I think as you move forward over the next 3-5 years, you will see, I think, probably more oligopoly kind of scenario emerging, and the consistent improvement in ARPUs. You will see that. So, if you are patient and from slightly long-term perspective, I think, Bharti will have a lot of legs, because I think industry is consolidated and we all use more of data, more of communication. So I think that is given, and especially when the market is consolidated. So I quite kind of, remain positive on the entire sector.
Well, yesterday, good morning, Vikas. Thank you for sparing time for us on what should be a busy day. Yesterday, there are 2 or 3 results which, on which we would definitely need your view. What did you make of L&T, Axis, Hero?
So I have not, in particular detail, I still looked at, all of them. But in general, I think L&T was kind of a bit disappointment, if you ask me. But, that is expected, because the kind of, lockdown we have had, in last quarter, most of the projects are still coming live. So, I would assume that structurally, L&T looks very interesting, because you are at the bottom of the cycle. It's one of the best players. Again, their industry is consolidating. Most of the EPC companies are sort of out of business. And also L&T is now much diversified story, especially a lot of it coming from technology. So I think, we quite positive about the stock, and this quarterly number per se does not change any of the view on that, because this quarterly number, whether lot and positive and negative, should be looked at with a bit of a sort of careful approach, because you have to go into the details to understand, because some companies have reported stellar results, but then a lot of pent-up demand which came through, which would have happened in case of a lot of auto companies you have seen. But in case of a construction company, where the ability to do projects live itself was very difficult in the last 3 months, so they are bound to report sort of poor number. So I would say, one should not really focus only on this quarterly number, but one should more focus on, directionally about what's happening in the industry and at the company level.
Okay, all right. Vikas, just stay on, because the overarching theme has been this massive slide in global markets and the resurgence of COVID-19 cases across both US and Europe, and fresh lockdowns as well. We have a guest joining us to make sense of all this chaos. Jim McCafferty, the Global Markets Research Head at Nomura, joins us on the line from Hong Kong. Jim, thanks so much for joining us. How do you approach equities now amidst this rising COVID cases issue? Is this a time for long-term investors to be buying every dip, or is it the time to be cautious and move to capital preservation?
So I think for global equity investors, these investors have quite a wide choice of markets to participate in. And if you look at the way that markets are divided on a conventional basis, you've got developed markets and you've got developing markets. And oddly enough, here in Asia, we have a large number of developing markets, which, while they have that category, exhibit lots of strength, we think, in terms of the company balance sheets and in terms of the local governments. And markets like China, markets like Korea really stand out in terms of countries where there's been a lot of discipline in terms of controlling COVID, and also companies which have very strong financials and balance sheets. So for that reason, we think that Asia, as a wide equity market, actually has got a lot of insularity from some of the wider issues around COVID in the West.
Certainly, when one looks at the COVID numbers, you get that feeling. But Jim, morning, and thanks for joining. We are seeing some more cases emerging in China as well. We were just chatting when we were in February and March. We thought that virus is a Western phenomenon. Now, it is very tempting to believe that the second wave is a Western phenomenon or a cold countries phenomenon. But can we be that reassured that there won't be an equity meltdown in Asia as well? And a virus attack?
No, we can't. But what we can do is we can look at the types of government and the types of society we have in Asia relative to the West. Now, in the case of China, we have in many ways, a kind of authoritarian state where the population is quite deferent to the government and people as a whole do what they're told. That doesn't happen in the case of Europe and the case of the US. What we're seeing now in Europe overnight is we're seeing the beginnings of civil unrest. People are challenging government decisions, they're challenging government authority, and for that reason, COVID, I think, has got the danger of spreading much more quickly. In the case of China, in the case of Korea, in the case of Taiwan, we have countries which are recent democracies in some cases, where society is trained and goes through often military training to respect and obey government declarations. So I think that the two different types of societies are reasons why that if you're a global equity investor, you'd be more comfortable being in markets in East Asia.
Well, that's actually worrying, right? If it's the beginning of civil unrest in many parts of Europe, and of course the issues of COVID just compounding the matter. So do you see more money move into emerging markets like India because of the problems that developed markets are facing?
Well, oddly enough, India, while it's an emerging market, it's also an expensive market. So if you look, for example, at China, it's trading on a P multiple out for 12 months of 15 times. India, on the other hand, is trading at 22 times. So I think from a global standpoint, if you look at where countries are from a global economic point of view, I mean, China is the second biggest economy in the world, but its stock market doesn't have that representation in indices. So I think China is going to emerge as a stronger, not just economy, but as a stronger stock market, as partly as a consequence of the COVID issues we're seeing in the West.
Okay. Are you expecting as bad a dip as March, Jim, in global equities?
I beg your pardon?
Are you expecting the dip in global equity markets to be as bad as March?
I think we've got a couple of very immediate geopolitical issues. I mean, firstly, we have a US presidential election next week. If that goes the way the market's expecting, which is a Biden victory, if that victory involves a strong majority, then we will see the spending plans beginning to come through and be analysed by the market. That would be very positive, I think, for Western markets. But if we have a victory which is not quite as strong as people would like to believe, then I actually think that markets, in terms of equity markets, money will flow to Asia. So there'll be, I think if that happens, then we'll see a bit of a bifurcation. Western markets, Europe and the US, will be out of favour, and the markets which will be in favour will be Asia, led by Japan, China, Korea.
Okay, well, that's a slightly optimistic view after a very, very somber interview. Thanks so much, Jim, for joining us. And hopefully the next time we speak, the COVID situation would have subsided. But thanks for that. So that's the word coming in from Nomura. They say that things are beginning to get very uncomfortable across the world. And perhaps money could move out of developed markets and into emerging markets like India. But let's get back to our conversation with Vikas Khemani. He's been sitting by patiently. Vikas, the other space I wanted to discuss with you is two-wheelers, because we had some really good numbers come in from Hero MotoCorp. The management outlook was positive as well. Is this a stock you like, and would you put more money to work here?
So I think, auto in general is a space we like, and two-wheeler will have slightly better demand outlook for at least in foreseeable future, because I think most of the people in this current situation would prefer to travel by their own vehicle, and two-wheeler offers a sort of cheaper option as compared to cars. So a lot of demand can be still seen there. So we definitely like the space. I wouldn't like to comment on the stock specific, but I think generally we like both four-wheeler as well as a two-wheeler space. And two-wheeler in a shorter term, next couple of quarters, can probably outpace the demand growth.
Because this pharma run, is it getting over, you think, or is this just a pause before a fresh move starts?
I think we've just come out of almost 5-6 years of consolidation. So I don't think, it is going to be such a short-lived pharma. And I think we have lot more legs to it. According to us, it is a 3 to 5 year kind of change, both on a domestic front as well as on the international market front. So I think a lot more to go. You'll be surprised how many pharma companies can double from here, multiply from here. So don't look at very very short term trend. Of course, whenever any sector does well, there's a sharp rally and then there's a consolidation which happens, which is happening right now in sectors like pharma, IT, and even for that matter, it might happen at the overall market level. So to that extent, I see more consolidation than really any other worry point.
All right. Vikas Khemani, thank you very much indeed for joining us on what's a very important day for markets and for corporate results. Thank you for giving us the benefit of your advice. We have to take a break. On that note, we will have our technical experts joining in, Ashwini.